Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 11th of March. Now markets are looking fairly settled in terms of sentiment coming into Friday's session. There's been a tick back higher on indices. Commodity prices are a little bit mixed to slightly lower, and also what we are seeing is Forex majors taking a bit of a pause. This slight dollar positive bias continuing from yesterday's move where we saw treasury yields spiking higher. That helped the dollar to perform well. Dollar yen breaking higher, cable breaking lower. But generally speaking, markets have reasonably sort of settled down and consolidating into the European session. Now, there are no significant new headlines coming out from the Russian invasion of Ukraine, although one to watch, I think, over the weekend could be the use of potential chemical weapons, which obviously is going to be a significant escalation in that. So that would be the risk, I think, over the weekend. But generally speaking, markets are fairly calm at the moment. The Michigan sentiment data is the only real data we need to be looking out for this afternoon, later in the US session. So that will be potentially for dollar traders there. Now, the charts we're looking out for today. Well, we've got the breakout on dollar yen and the implications of that move. How far can it go to the upside? Is it going to continue to move higher? Also looking at the oil price, which has been starting to show signs of selling into strength, interestingly enough. And also we're looking at the FTSE 100, again a market that had been a bit lower yesterday but starting to find a bit of support, and is an important support starting to form. So let's have a look. So onto the Infinox MT5 platform, starting off with dollar yen. And what we've seen over the last few months is that dollar yen has been sort of stuck in this range or so almost, but there has been an uptrend. And essentially what you could argue is that the breakout above 116.37 is now a breakout from arguably an ascending triangle. And if you stick it on the weekly chart and then go out a couple of levels, you can see the importance of this breakout. It's at levels now not seen since 2017, so 5-year highs on that. And that 1875 level is the next key resistance on this. And if you again measure this as an ascending triangle breakout, you can arguably sort of target from here, from this bottom trend line, around about 400 pips higher, which again brings you to around about that 1875 target area. So what I would say is when dollar yen goes, it really does start to move and motor. So this breakout is continuing today. And it's looking at strong momentum, positive, but not overstretched yet. You'd say that the breakout level of support, how the market reacts around there to an intraday pullback, 1637, would be important. That is now a basis of support on that breakout, but it certainly is looking strong on all metrics. A little bit stretched on the 4-hour chart. That's understandable given the run higher, but certainly looking positive. Onto the oil chart. Now, obviously we had that sharp spike higher on the Russian invasion of Ukraine. And in the last couple of days, we've seen these negative candles forming. Intraday selling into strength. And yeah, this is interesting because it happened again yesterday. We had a rally back towards this pivot line, which shows well on the 4-hour chart. Pivot line at 121 figure area, 121.10. And that's now our basis of resistance, clearly. As this moving average rolls over, that's the 21-period moving average on the 4-hour chart. We've got the momentum on the 4-hour. Again, less positive. 50 area is seemingly a sort of a point at which the market is now turning lower. So we've got this tick higher today. If that starts to fall over again, it could be forming another lower high. So that would be what I'm looking out for. And then you've got the support at 108.70 initially, 107.30 was that reaction low from the spike lower a couple of days ago. But certainly there looks to be more of a feeling that oil is now starting to either just consolidate or even potentially turn lower as the market just starts to settle down again. And finally on FTSE 100, this is the 4-hour chart. We can see this recovery decisively in the first few days of this week, but now just started to correct back. But what I would say is putting the crosshair on 70.30, there is a pivot line there, and 70.50 has been the reaction low today. So there's an important support there, and it just seems as though that this is starting to just build something. It's not yet anywhere near a bull flag or anything, but that could be what it turns into in this consolidation. And the market will be certainly looking out for yesterday's high at 71.80. And if that can break above there and then move on that 72.50 area of resistance from that spike high the other day, then we could be talking about a decent recovery as the market just starts to deal with this overhead resistance of the old overhead supply from all these lows back from the turn of the year, December into January. So this is, again, an important moment for FTSE. Can it break through that resistance? If it can, that bull flags, and then it moves decisively higher. But just for now, it's in consolidation, and that 70.30 to 70.50 level is key. So thanks for watching. I hope you found that informative for your trading. I'll be back on Monday, where we'll be starting to look ahead to the Federal Reserve meeting, which is next week. So I'll leave you with Infinite support and resistance table, and I wish you good luck in your trading and whatever you're doing this weekend. Thank you very much, everyone.